Okay. Right, good morning and welcome. You're watching BQ Prime. Thanks for tuning in. Let's quickly move the conversation forward. We're sticking with the big banking story. RBI has tweaked the risk-weighted asset norms, and we have with us Sumit Bali, who is the head of retail at Axis Bank. Welcome, sir. To try and understand the impact on Axis Bank, let me quickly understand from you the size of the book which will get covered by this particular new development, and what will be the revised capital adequacy. Could you talk to us about a couple of those factors?
Yeah, good morning. Thanks for having me on the show. I think RBI has been voicing the concern about the high growth rate and higher delinquencies on the unsecured loan. So this is something which is in line to control the growth in that segment. It impacts two, three things. So since it is also required for existing books, so the capital consumption for the existing book will go up by about 25%. Incrementally, the business you source, you will have to increase the yield so that your returns are protected. Thirdly, I think for the NBFCs, it's a bit of a double whammy because not only will they have to increase the lending rate as capital requirement for them goes up, but the pricing for them on the loans from bank to NBFCs will also see a uptick because even there 25% risk weightage has been increased from the current level. These are the 2-3 impacts. So higher capital consumption, higher rates for the customers, and as I said, for NBFCs, it's a bit of a double whammy.
Okay, so Sumit, Murli here, and thanks for joining us. My main question to you is, what will be the impact for Axis Bank? Because if you could tell our viewers, how much is your exposure to retail unsecured loan, and how much capital do you have to increase by?
So we're still working through it because the impact is also on unsecured loan as well as on the NBFC loans. Now both of these we'll have to calculate, but I'll give you a few numbers which are a bit indicative. Our overall exposure on the retail side in terms of unsecured exposure has been about 21% odd. Incrementally also it's similar in line with that. That I think will require higher capital. There is a separate line of credit to NBFCs, etc. So this doesn't include HFCs, so that has to be calculated. But as I said, it's one of the overall the exposure on unsecured has been a bit lower. So you'll have to work the numbers and come back on that. But it will be limited. Higher the exposure to unsecured for a bank, higher is the impact.
Right. So got that. But does this mean, therefore, that there will be a change in strategy with regard to growth? Because when I'm looking at your retail unsecured book, it's grown at a fairly healthy clip over the last year or so.
Yeah, see, what you have to also understand that retail loans, these are short-term loans, relatively shorter versus, say, the longer-term, the secured mortgages loan. So even the growth may be higher, but overall the book composition, that is where it impacts the capital, has been in the range of 18 to 21%. So currently our book unsecured exposure is about 21% because it is a shorter tenor loan, so it runs off faster. So that's where we have been in the past and even going forward. That's where we intend to be, and we'll have to increase the pricing on the unsecured loan side.
Understood. So, sorry, quick follow-up on that. So 21% of your total book or 21% of your retail is unsecured, just to try and get that clear. And the other one is...
of the retail book is unsecured.
Understood. And where will pricing therefore go in your view? Will there be 100 bips, 200 bips impact broadly? How would yields move?
My sense is the personal loan market should see an increase of about 50 to 75 basis points. It could vary from institution to institution, but I think that's the ballpark number which it will increase. And therefore, the expectation is that it will also slow down the growth.
Right.
in the unsecured business.
Right. So if one action for you is to increase the lending rates to translate it into common parlance, my next question is, what is the NPA level of all these unsecured loans? Are you how much is the NPA? What percentage of the retail book is NPA?
See, overall on the retail side, I'll give you an industry view that for whatever we gather from the bureaus, the unsecured book of less than 50,000 rupee ticket size is where the stress is higher. For us, that's not where we operate. So that book for us is virtually nil. Overall, for us, the delinquencies have been following a longer-term trend and have been in control in line with our risk appetite. We haven't seen a change in the risk profile of the customer or the portfolio delinquency numbers.
Okay. So are your customers, bulk of your customers, are they salaried people?
Yeah, for personal loans, we are looking at salaried customers, and 83% of our salaried PL customers have a bank account with Axis Bank. So they are existing to bank customers.
Right. Okay. So my next question is, this is one industry-wide serious concern. It was flagged off. There is this fear or apprehension raised in the regulatory circle, so both at the market regulators level, which is of course not officially reported, that funds from personal loan are being diverted for speculation in the market. Have you been monitoring this? Have you come across such instances?
See, personal loans by nature are loans which are required by a customer. So the end use is not tracked. It is not possible to track the end use. My sense is the money is in the hand of customers. It could be utilized for anything, buying consumer durable or emergency medical expense or a holiday. So, and it could also possibly get into the stock market, but that's difficult to track the end use of that loans.
Right.
Right. And, Axis has been in conversation, or rather, there always been some speculation with regard to fundraise. Will this therefore mean an accelerated fundraise for Axis Bank? That's currently the golden question.
So we have mentioned earlier also that there's no plan as of now. While we work through the numbers, we will have to assess the impact and take a fresh look at it. I can't comment on the future possibility after this development. We'll have to work the numbers and see.
Right.
But overall, if you see our results in the past, we've been well capitalized and we've been in a situation where our profit generation is enough to support our growth in business. So it's a relatively comfortable position to be in, but we'll have to assess the impact of this.
Right. One last question before I thank you. Do you think these measures from the RBI are good enough to control the relentless rise in personal loan lending?
So my sense is regulator has a better view of the overall market. They know exactly where the pressure points or the problem points are, and accordingly they've taken action. So therefore, if you see the impact on banks vis-a-vis NBFC is limited. For an NBFC, it is higher. And generally, most of the NBFCs are the one who are active in less than 50,000 loan. So for them, they'll need to increase the rates higher than vis-a-vis what a bank would need to do. So my sense is it would lead to a moderation in the growth rates.
Right. And what does this do for NBFCs? Give us a perspective. The Axis Bank, I know you don't directly run the NBFC there, but you all have a retail-focused NBFC yourselves, as well as, of course, likely you all will be lending to NBFCs as well. So what's the sense there? What is the kind of impact with regard to cost of funds that is being anticipated?
The cost of funds for NBFCs again will have to go up by about 40 to 50 basis point on an incremental basis, and the current book also has a reset clause. So we'll have to see through that as to how we can transmit for the existing book. But for fresh loans, certainly the costing for NBFCs will go up.
And one last question with regard to the regulation itself, the change itself, right? So the RBI has spoken about consumer credit for banks, where they haven't mentioned MFI, which is microfinance. But from an NBFC standpoint, they've specifically and categorically excluded MFI from consumer loans. Does this therefore mean that MFI ought to be included as part of the math when you're calculating your revised capital adequacy?
We'll have to seek that clarification. We also observed that specific specification was missing, so we'll need to get it clarified.
Understood. Got it. Right. Thank you so much for joining us. It's been a pleasure speaking, and thank you for breaking this up for us from an Axis Bank perspective as well.
Thank you. Pleasure being on the show. Thank you. All the best.